Physical gold versus paper gold. Which do you choose? In this video, we will break down the differences between physical gold and paper gold, covering aspects such as acquisition, advantages, disadvantages, and key factors to consider when you're making your decision. From tangibility and ownership, we will explore all the aspects of both gold investments. To read the full article right now, see the link in the video description. We will also discuss a variety of gold investment options throughout the video, so make sure to watch till the very end so you don't miss them. The pros and cons of owning physical gold versus paper gold revolve around liquidity, taxation, tangible access, costs and fees, and degrees of counterparty risk associated with each type of gold ownership. Let's start with some quick basics. Gold is a precious metal that has been used for centuries as a medium of exchange and store of value, and it continues to be a popular investment asset in financial markets today due to its unique properties and hedging capabilities. Gold is easy to buy and sell and functions as a form of wealth preservation insurance. Many experienced investors and capital managers have used gold as a means of hedging against risk for themselves as well as the clients they serve. To find out how these famous investors leverage gold, see our series on how to invest in gold as a beginner, link in the upper right. Physical gold refers to the actual tangible gold that is held in the form of coins, bars, jewelry, and gold bullion, which is a direct way for investors to own this precious metal. Physical gold can be acquired through various channels, including purchasing from local dealers, buying online at market prices, or acquiring through central banks. When considering buying physical gold, it is crucial to work with trusted dealers who offer authentic products to ensure purity and quality. Reputable dealers play a significant role in facilitating transactions and providing expert advice on investment options. Some investors choose to store their physical gold with custodians to safeguard their precious metals securely. We will cover this in more detail later. One of the primary advantages of holding actual tangible physical gold is direct ownership without counterparty risk of third-party contracts normally associated with paper gold assets. Physical gold, unlike paper investments, is a physical commodity that you can hold in your hand, making it a preferred choice for investors seeking a sense of security. Gold's inherent value comes from its scarcity and universal acceptance as a store of wealth. Gold is a Tier 1 asset that is accepted all throughout the world as a form of money. When you own physical gold, you have peace of mind knowing that you have a tangible asset that is not dependent on the stability of financial institutions and modern digital infrastructure. This direct ownership gives you control of your investment, enabling you to store it in a way that aligns with your preferences. Storage options for physical gold range from personal safes to secure vaults and depositories offered by reputable custodians. These options ensure that the gold is protected and accessible whenever you need it. Despite its benefits, physical gold comes with certain disadvantages, such as storage, insurance requirements, and associated fees. Storing physical gold in your home could pose certain security risks, such as theft or loss or damage. Therefore, ensuring your gold becomes a crucial safeguard for your investment against unforeseen events. The process of purchasing gold involves various fees, such as premiums over the spot price, shipping charges, and potentially transaction and storage fees. What is paper gold? Paper gold refers directly to investment vehicles, such as mutual funds, exchange-traded funds, ETFs, and shares in gold mining companies like GLD that can provide exposure to gold without the need to physically own the metal itself. Paper gold can be acquired through financial markets using trading platforms, where investors can buy shares of gold ETFs or mutual funds managed by their portfolio managers. This method of buying paper gold appeals to those seeking convenience and liquidity in their investments. Portfolio managers play a crucial role in managing these funds, making decisions about buying and selling gold assets based on market conditions. It is essential for investors to review the fund's prospectus thoroughly before making the investment, as it outlines important details such as fees, risks, and investment objectives. One of the key advantages of paper gold is its high liquidity and ease of trading, which allows seamless integration into a diversified portfolio. Investors often appreciate the flexibility that paper gold offers, enabling them to capitalize on market movements without the constraints of physical gold ownership. This ability to trade paper gold swiftly on major exchanges enhances its appeal as a dynamic investment tool. One of the major risks associated with paper gold investments is the potential for counterparty default. This occurs when the entity backing the investment fails to fulfill their obligations, leading to losses for the investor. Managing these investments often involves fees such as storage costs, management fees, and transaction fees, which can eat into the overall returns. Market manipulation can impact the prices of paper gold, distorting the true value of the investment and possibly leading to further losses. Paper gold ownership often involves holding shares shares in gold ETFs, gold futures contracts, and gold certificates. While paper gold offers convenience and liquidity, it lacks the intrinsic value and security of holding the physical gold itself. Also, a common feature of paper gold investment products, such as unallocated gold forwards or futures contracts, is the lack of physical gold backing that contract. Furthermore, within each contract, there may exist permittable third-party modifications and built-in escape clauses that can further complicate the investment, which increases the counterparty risk. That is why it is incumbent upon the investor to thoroughly review the contract before moving forward. The differences between physical gold and paper gold are significant and multifaceted, encompassing aspects such as tangibility, ownership, liquidity, storage requirements, and associated risks, making each type of gold investment unique in its own way. Your investment goals will significantly influence whether physical gold or paper gold is the better addition to your portfolio. For long-term wealth preservation, physical gold tends to be the more reliable option, as it has intrinsic value and serves as a hedge against economic uncertainties. Also, the immediate access to the investment cannot be ignored. On the other hand, if you focus on short-term gains or trading flexibility, paper gold instruments like ETFs or gold futures may be more suitable due to their liquidity and ease of transaction. Understanding your desired outcome and risk tolerance is crucial in determining your most appropriate form of gold investment. Ultimately, the choice between physical and paper gold depends on your financial objectives and investment strategy. Investors with a higher level of risk tolerance often lean towards paper gold, as it provides convenience and liquidity compared to physically holding gold, which may require storage and insurance costs. On the other hand, those with a lower risk tolerance may prefer the tangible asset of physical gold due to its lower counterparty risk and immediate access. When embarking on the path of gold investing, working with a trusted and reputable gold investment company can alleviate a great deal of guesswork, time, and possible financial setbacks. Leveraging the institutional knowledge of these companies will provide you with the ability to maximize your gold investment. Gold IRA companies, more specifically, can provide additional benefits up and beyond merely buying physical gold from a local dealer. These companies offer competitive prices, sound buyback policies, transparency, reliable customer service, and robust security and storage options for your precious metals. These storage options through a depository alleviates the worry of holding and securing your gold within your home, if you so choose. Dependent on the volume of physical gold you intend to own, it is usually advised that you do not store all your wealth in one place. Also, many gold IRA companies will waive certain fees depending on the investment minimum. Whether you are a beginning investor looking for an affordable, low minimum entry into the gold ownership market, or a high net worth investor looking to take advantage of the best gold prices, we have researched, reviewed, and ranked the best gold IRA companies that meet this criteria. See the links in the video description to find the right gold IRA company for your investment needs. Furthermore, if you're looking for a gold investment company that provides the benefits of a gold IRA as well as private ownership, Noble Gold Investments is a great option. In addition to gold IRAs, Noble Gold provides Royal Survival Packs with an array of packages ranging from $10,000 to $500,000 plus. Noble Gold will ensure safe delivery of your gold and silver to your home. This provides immediate access to tangible gold and silver as well as peace of mind. To conclude, you are now aware of the various advantages and disadvantages of owning physical gold versus paper gold. Weighing the tangible benefits of physical gold ownership versus the convenience of paper gold contracts, which involve greater exposure to counterparty risk, can inform one's investment decision. Whatever you decide will be based on your specific needs. Best of luck to you on your gold investing journey. If you enjoyed this video content, please like and subscribe so you don't miss the next one. If you are a serious investor with at least $100K in retirement savings and want to take advantage of the best gold prices, see the link in the video description to attend a free gold educational webinar hosted by Augusta Precious Metals. Thank you for watching.